I invested $10 a day for 30 days.
Investing $10 a day until I hit 10K.
Day 29, investing $10 a day until I hit 10K.
Day 30, investing $10 a day until I hit 10K.
What were we able to accomplish? Now, I know it doesn't look like a lot, but 4 times 12 is basically 48%. So basically 48% annual returns. And who else other than Warren Buffett, Michael Burry, or Peter Lynch could achieve such returns? None other than me, Pasha IRL, where I will join the ranks of legendary investors. Join me on this legendary investing journey. Now let's head over and explain what went into the portfolio.
So at day 30, we're at about 8 companies. Obviously, returns are not looking that great, but percentage-wise, we're doing pretty well. Now we're going to go over some of the metrics as to why we picked these companies. Now our lowest holding is AutoZone, AZO.
AutoZone's had great revenue growth over the past 10 years, but one of the craziest things about this company is its extremely high return on invested capital. Also, during the last recession, it did not even lose profit. Now, as you can see here, its beta is at 0.68, and beta, so you guys know, is a measure of volatility of this stock versus the stock market. So above 1 would mean that it's more volatile than the stock market, and below 1 means it's less volatile. So we want to have a mix of low and high beta stocks.
Second holding is a uranium ETF.
This was a bit of a random purchase, but this is probably too long-term of a play for me to keep in the portfolio.
Next one, we've got PayPal.
This one's got a great revenue growth over the past 10 years. It's also got a decent return on invested capital. It's fallen from its 2020 highs, so I thought it was a great value play.
Hello. Fourth holding is Pfizer.
Pfizer has a decent revenue growth and an okay return on invested capital. The biggest thing that makes it attractive is its low PE ratio and its high dividend yield.
After Pfizer, we got JD.com.
This company has had incredible revenue growth, and its return on invested capital looks like it's going to go positive. It's trended down over the past couple years, but it's finally hitting prices that may be good enough to buy at.
After JD.com, we have Discover Financial.
All of these numbers are looking way better than other banks. With such a low price to earnings ratio, it was a buy for me.
Our second to largest holding is Alibaba, Chinese company.
Just like JD, the revenue growth is insane and the return on invested capital is good as well. It's fallen to its historic lows and I'm trying to buy it under 100.
And last but not least, Disney.
Disney's one of the oldest companies that we hold so far. Its profit's been recently hit, but if they're able to restore it, this could be one of our best returns in the portfolio.
Make sure you subscribe to stay tuned, and I'll see you at 100 days.